All right, guys. So today we took multiple setups. I won't even lie to you guys. I took so many setups. Took 3 setups, shorts to the downside. Um, I bought a new combine because again, the other one I hit my daily loss limit. I was going over it in the documentary, and I was talking about some things that I just needed. I need to deal with honestly, and that's what I'm gonna go over here. Was as soon as I lost, so I took a trade. I have it on the chart. I'm gonna show you guys, but I'm gonna go over this first. I took a trade and I lost. I didn't risk as much as you can see. I only risked 5 cons at 835. And this is another thing about me too is I don't like trading 15 minutes into market open. I genuinely like I like time-based trades, but I also it's something I was talking about in the documentary. But I'm doing a 90-day. It doesn't matter. You'll see it. But I usually like waiting 10 to 15 minutes of the market being open and just moving back and forth and building that, RTH volume profile. That's a big thing about me. I just like waiting for that. I like waiting for the data to be driven, waiting for all that to be formed. And, you can see yesterday we took so many trades. Today, I just realized why not just wait for the highest quality setup, enter. And if, the bias is correct, the entry shouldn't be as hard and complicated as I was making it seem. And that's a big thing. I was like, you know what, you're making this way too complicated. Your entries, you had way too many entries. The bias was correct, the intention was correct, but your entry was just all over the place. Just wait for the market to form something on the 15, the 5 minute, and then of course using the volume profile, using the SMTs. I was like, you know what, just wait for something nice to form to then eventually capitalize upon what the market is offering. And we're inside of a range, we're inside of a pickle. And then this trade was just 2 trades. First one we entered, we got stopped out. And this is a big thing too. Like I'm going break even pretty soon because I'm trying to trade more of a continuation. This is another thing that I'm realizing is reversal setups are good. They're nice. They're clean. And then there's a different type of setup I like taking out. It's continuations. It's not usually, off of fair value apps. It's not off of any of that. I just use discretion. And it's weird because again, after you trade for so long, after you've been in the market, you've been watching it, you've been dissecting price for so freaking long, using every single confluence, you're using order flow, you're using options flow, you're using ICT, you're combining it all together and you see the market for what it truly is. To me, like, I just feel like I can trade so many different ways now. And one of the ways I like that I've been just seeing and experimenting, which the past couple of days, is continuation trades. I love the way the continuation trades move. You can go break even pretty soon because you want to see the market just melt, or you want it to see it expanded higher. And you can go break even soon. You want to have a little bit of a tight stop loss, and it just allows the market to just reach your areas of interest or your liquidity points. So here are the trades that I lost on this account right here. And I am a little bit upset because again, this account was one where I had expectation today. I had expectation today going into the market thinking like, oh, I'm going to pass this account, and I got, FOMO. I would say I got FOMO. I went to journal that I got FOMO, because I entered at 9:35, not realizing, like I'm entering way too early. Of course, this was the draw on liquidity, these lows right here. And then, of course, that's like a break-even point. That's a break-even point. I wanted to see the market reach that, move down lower, and I'm break-even, not really reach my break-even and continue to the downside. But we never did that. We came back up into this 1 hour SIBI, and then the market just started to melt. So at 9:30, the market was pushing up. I knew this is a false move. False move. Well, I didn't really know it was a false move, but we're, bouncing off a value area low. I was like, all right, if we're going to push up, we're going to do it now. Probably not going to continue, But then I thought about it too. I was like, if we were going to push up and start having continuation and displacement to the upside, wouldn't we sweep some form of liquidity first? Wouldn't we, start to push down lower, and then start to target higher prices? And when I saw this right here, I got stopped out, and I saw this. I was like, oh, we're gonna form an inversion. I'm gonna wait. I'm gonna wait for the market to, try to reach up here, break above those highs, and then retrace, and then continue up higher if we're really gonna be bullish, or something like this. Let me show you guys. So if we're gonna push up here, we're gonna probably do that, do this, form that, and then retrace and continue to the upside. Like just have bullish market structure, We can enter off of the inverse, but I'd rather wait for the change in the state of delivery and then a retest and then forming another little inversion to then continue higher. I just like the entry having more confirmation instead of entering it really early on, and that's how I'm going to try to treat my entries a little bit more. Because again, I want to have extra confirmation. I want to have the market reach my target and have the most amount of confluence as much as possible to allow me to win. And we took another trade, and this is another thing. After the loss, I risked more on this trade. In all the reality, I got stopped out like you can see I got stopped out like at 14 points, bro. I got stopped out at 14 points, risking 15 cons. As soon as I saw this right here, I thought, again, thinking and just like thinking, oh, we're gonna melt on the 15-second time frame. We're probably not gonna we're gonna reach this, and then we're probably gonna hit our target, reach our objective, and then we're probably gonna just call it a day there. But again, I only had $500 of drawdown, and I should have probably risked only 5 cons. Because again, if I risked 5 cons, the stop loss could have been right around here, and I could have targeted just a 1-to-1, bring me back to break even, if not a 1-to-2 to put me in profit. And you can see that there, that would have been met, but I probably would have got stopped break even. So yeah, and then on this one right here, if I go to the object tree and I take this off, this was the initial trade right there. So here was the trade. First one again, market pushed down lower, almost reached my target, edged it, I went break even. Why? I just thought to myself, and again, I did de-risk. I just thought to myself, entered at 97 right around here. So right there, market pushed down lower. We're already 20 points away. I thought to myself, we're edging my area of interest, which is the break-even point. I didn't like that. One more manipulation, reaching back up into this mitigation block, formed another 15-second inversion, pushed down lower, reached this key draw on liquidity, and then we started to melt. And I just simply held the trade, waited for the market to melt, and that was pretty much really it. Now we're just range bound, and yeah, that's pretty much really it. So, this is a key draw on liquidity, and this low down here was also on this area right here was a key draw. So this range low was a key draw for me. That 1 hour civvy, 30-minute candle range high, 15-minute candle range high, 15-minute busy didn't mean much to me, honestly. 5-minute time frame, you can see with just multiple down close candles, these wicks were doing the damage though. Those wicks were the ones that were stopping me out. Those wicks were the ones that where the market will push up and give you that false move. And I was exiting early. Those wicks also created up close candles and a downtrend, which was supporting price to continue lower. Clean price delivery to the downside. Mitigation blocks, bearish mitigation blocks forming. Clear. You have your little Judah swing up here. Market moved down lower, melted. Formed that change in the state of delivery. Market retested, 15-second time frame. That's where the highest probability entry would have been, is right around here. That's your highest probability entry. You have a retest. You can probably enter again if you get hit break even. And that's the trade I took, basically. So just waiting for the market to give you that high probability setup. And again, I'm doing this 90-day documentary where I'm reprogramming myself and I'm building myself back up. And I'm taking it slow. I'm taking it like an average individual would, like everybody would. You start with one or two combines, and you slowly start working your way to trying to get that payout, building the good habits. And again, I'm stripping my G7 system down, and I'm rebuilding it back up. And I'm seeing what works. I'm seeing what actually sticks, and I'm building it. So I'm like journaling wise, I'm trying to rebuild it. Taking these trades with continuation setups, different profiles, I'm building it. I'm building that because again, as a trader, I have so many different tools. I have order flow, I have options flow. Like I said, I have ICT. I have multiple ways of trading and viewing the market and multiple different ways of entering the market. And I just don't want to limit myself to simply taking an IFVG reversal anymore. Because again, in my honest opinion, I felt more mechanical than ever. I felt like I was pattern trading every single trade. Every single trade you will see was the same setup. And then whenever I would lose, I would give myself the same excuse. Like, oh, maybe it wasn't this 4-hour fairly up was not a good 4-hour fairly up, or wait for the external sweep. And then whenever we did have that, guess what? What would I blame? I can't blame anything else. I can't blame the confluence. I can't blame the market. I can't blame anything. And I was just like stuck. I was like, wait, I'm stuck. Like if I have a certain confluence not work out, and like why am I like, what am I doing? I was just like in a brain fog, and I was thinking to myself, and I stripped it all away, and I was meditating. I was like, bro, you're pattern trading. That's why you can't blame anything else, because it's a pattern. It's a pattern. You're trying to blame a pattern when it doesn't work and everything was presented. But when it does work and everything was presented, you can't give it any, you glaze it, bro. And that's just how the market works, though. But from my experience, I've just realized trading discretionarily is a little bit more, I would say, more rewarding in my honest opinion. Because again, it's you, the person, the trader that's viewing the market, and your market perception is so important. And that's, again, really important because, again, when you're journaling, you want to control your market perception. You want to analyze, you want to build it. And yeah, that's pretty much really it. I got to go after this. I'm going to go listen to a podcast. So yeah, that's pretty much really it. Peace.